Good afternoon, traders. This is Christian Farmer. It's Trade Trader Group, and this is your end of day market recap for Tuesday, March 14th. Let's get right into it because I've got a decent amount of themes that we can kind of talk about today. Today was a pretty whippy day. It was one of those days where well, of course, we had some events, which I'll go over in just a second, but overall, we opened up really strong in terms of market breadth, and it kind of was repeating the pattern of what we've seen a couple times in the last few weeks, where market breadth has opened up pretty strong and kind of stayed that way for about the first hour of the day, and then has been kind of leaking throughout the session. And we really started to see that leaking, once we get to lunchtime. There was a headline about Russia plane and a drone, which the market didn't like. That kind of gave back some of those gains, and the regional banks were kind of bleeding some of those gains. I think at one point the regional bank ETF was up about, I think, around 8% for the day, and yeah, up about that much. Still hung on to gains for the day, but just barely. At one point, the KRE, so again, like it started the day up around 8%, was gave it all up to only up about 0.5% for the day, and then hung on there with that. There was, I believe, some type of a buy program that hit the tape at the end of the day to kind of help out the market, and the regional banks finished up about 2%. Don't forget, in terms of buy programs and so forth, quadruple witching is Friday, right? And one of the witches that nobody seems to ever talk about is that there is a huge index rebalance that's happening on Friday, right? That's the S&P and NASDAQ. They reweight all of their indices. This isn't the add one and take out one type of rebalance. This is all of the indices get rebalanced back to their benchmark weight. Remember, what's the one thing, right? Either in a market cap weighted index or in an equally weighted index, such as the KRE or the XRT or XBI, right? All of those get reweighted to equally weight, and then every quarter, and that's March, June, September, and December. Once between those dates, those quarterly dates, the one variable that changes is price. So as some names outperform others, they become larger weights in the index, right? Once we get to that quadruple witching date, the third Friday of those months, the indices do reweight them back. They do kick out a couple names and bring in a couple new names. They'll probably be doing that in the regional bank ETF, and then they reweight all the other names back to like equal weight or their market cap weighting. So all that creates a huge amount of trading on Friday, which is benchmarked to the close, and the big broker dealers, they all have a portfolio desk, and they all game this index rebalance and try to trade ahead of it a little bit. Usually they start that on Monday, but they can continue during the week to hedge that big index rebalance. So I'm not saying that that's what caused the end of the day move today, but certainly that there was a decent buy program at the end of the day. So it could be brokers getting ready for that, could be something else. So let's talk a little bit about, so the first theme of the day that I've got up here is basically an oversold bounce. And that's all that we know so far, right? We know that the McClellan oscillator got to some pretty oversold levels. Usually when that happens, it's like the equivalent of stretching a rubber band, right? And this happens with both buy pressure and sell pressure. And the further that you stretch the rubber band, it's going to snap back, right? And we've seen that when the McClellan oscillator gets overbought. We see it when it gets oversold. Now, the question is, will we see anything more from that? And that really depends. One of the things that I don't think I mentioned in yesterday's video, but I did mention it on Twitter, is look at the volume that's been coming through here the last couple of days, right? So this is S&P futures, but if you want to look at SPY as well, you'll kind of see the same thing, right? Even if you look at the volume from last October when we made this low, right? Here was the volume here, right? Notice that we're trading higher volumes the last couple days than even the lows that we made in October. So there's a lot of there's a lot of volatility. There's a lot of trading going on right now the last couple days. So that's been different right? Because again, we haven't seen that volatility, since all the way, or that volume since all the way back in October, and this is even more so. All right, so where do we stand at this point? Well, I always use S&P futures because they are the most liquid thing out there, rather than SPY, but and I hope that's okay in my videos that I do use S&P futures. It's so similar to SPY. Sometimes people ask me for a SPY chart, and it's the same thing as it's really the same thing as S&P futures, right? But I do rely on it because I do like it to use it because there's more trading that happens. It's almost continuous trading, right? They're only shut for a little while, and people trade them, almost 24 hours a day. Except for the weekends, of course, right? So we're right at the 5-day moving average, right? We're so far below the value area for the month. We're kind of staying around this virgin point of control, right? Again, I see a lot of people talking about, myself included, saying, hey, we've been hovering around a range, right? Well, that shouldn't surprise anybody, considering that this is a big volume area that we haven't revisited, right? So we're kind of going back and forth a little bit like a ping pong ball with all that previous buying and selling that happened in here, right? And that sometimes you definitely see this around a virgin point of control. Again, why is it called that? Because it was a lot of volume back in here and we haven't revisited. That's what makes the red line. That's what makes them so important. Hence this one, we took this out and we actually went higher. So again, I've been talking about that we're kind of in no man's land because we're so far below the value area for the month, and we still have there's a virgin point of control down here too. Now, I don't know if that gets taken out, but if we stay above this one, obviously there's a better chance that we don't take that out. The 1 hour chart, as always, I see very good levels to kind of pay attention to here. And same thing, right? We simultaneously took out that virgin point of control on the daily chart, as well as this one on the 1 hour chart. And we're just kind of hovering around here, right? Around these levels. So that's where that derives from. So again, a lot of people talk about things that happens in the options market too, with, different expirations, but it's not just about the options, and different strikes and so forth. It's also about all the volume that happens in stocks, right? I see so much analysis sometimes that is put out by either someone who just looks at options or someone who just looks at futures. You got to put them all together, right? Because you can't neglect the stock volume either, as well as the futures and the options volume. But in any event, that's why we look at these levels, because this is all the volume, right? And speaking of which, we did close inside the value area for the week, right? And now your support level is 39.43, right? So that'll be something to watch. But again, I think it's going to be a pretty whippy week, considering tomorrow we get the PPI report. There's also ECB, which they have a meeting on the 16th, and then of course quadruple witching on Friday, and then next week we get a Fed meeting too. So I mean, it continues to be a very heavy event-driven week. Speaking of which, the CPI report, as I've been saying in my videos, I didn't think that this would be as impactful, just like the jobs report on Friday, as other reports, because of all this risk that's going on, that's being talked about with the banks and so forth. Speaking of which, I mean, some interesting moves taking place. These things opened up so strong, but they gave back some gains. So let me just continue to go through the indices, because I think there's some important levels to watch, and then we'll talk a little bit about that. But notice the Qs. Now, of course, they've been stronger. They're above, they did get back above the where we were yesterday, which we closed right at the 200 and right at the 50-day moving average. I didn't think that there was really anything to kind of hang your hat on in terms of a conclusion yesterday, and I went through that checklist. But today's a different day, and we did close back inside. So not only are we back above the 50 and the 200-day moving average, but we're also above all these short-term moving averages too. So again, there's still going to be, you could draw a trend line and say, oh geez, we're going to be hitting some overhead supply. That could be true, but at least we got above all these short-term moving averages. Also, the other thing too was that we kept on knocking on, the price kept on knocking on the bottom of value, right? And for a while it could not break through that 290, 257 level. So again, it looks a bit more healthy. comparatively to the other indices, right? And we're basically, back to where we were in the middle of last week, right? So just crazy, right? And round and around we go. IWM is a different story, right? That the regional banks or banks in general are the largest weight in the small caps. And, that was one of the reasons why there was such underperformance in the small caps last week. But we have taken out a level, and we did have the oversold bounce today, right? And I played this. I was waiting for the CPI report, even though I was kind of chomping at the bit to put on a trade. But, I put on this trade, right after the CPI report, right? And my target, which is what I, communicated to traders in the trading room today, was, hey, I was just looking for a move to the bottom of value. So for basically point A to point B, get it done and take it off, right? And that's exactly what I did. And I think right now, given how complicated this market is, because I'm going to speak for another 5 or 10 minutes about some of the other themes for the day, but it's an extremely complicated market right now. So if you could find a couple trades where you're just looking for point A to point B, try to simplify how difficult and how complicated this market is with just relying on a support resistance level. So here was my exit, 178.70, right? Which is right where we got to. I mean, this was right in the beginning of the day that we made this move, right? This was actually right before the open. I didn't even stay in this in the open, and then I wanted to kind of see how we were going to open and what the breadth was. I traded Tesla. How did I do this one? All right. And again, notice I didn't stay in this trade for very long. It actually seemed to do okay, and is actually trading up in the after hours a little bit. But I was just looking for this, right? Just right off the bat, just get a winner or two, under your belt, right? So, out of Tesla, it's $3 or something in this trade, and that's it. And then, this was also like right in the very first 5-10 minutes of the day, right? And then I could kind of let the market settle in and look for swing trades. That's how I played today. You could see, and I had, after those couple nice two trades right off the bat, it was just a little bit more challenging of a day. So let me go through a couple other things here, but IWM, right? So here's your bounce. I just wanted to cover this, right? And we'll see if we can bounce further. It's going to, that level again is 178.61, right? So we stopped right at that value area, which again is using volume at price, right? This week's value area on the 1 hour chart is based on all of last week's, and again, look at how difficult that market profile is, right? So what we're doing, of course, is lumping all of that data in and creating a value area, which of course is going to show significance. Amazing how that happens, right? All right, so so that was the first. So far, oversold bounce. Yeah, I mean, very interesting when you go one by one and look at some of these names, but same thing, right? Carey got up to the bottom of value there, in the even before the market opened, right around the 9 o'clock hour, we got right to the bottom of value, 48.87, and got rejected there. So that's a nice bounce. We are trading above the lows, but if you felt like, I heard a lot of people, talk about that they were kind of buying some banks for the long term in their either retirement account or long-term account, you may get another chance to do that. Because a lot of these names kind of reverted back. I thought it was interesting. CNBC had the Schwab CEO on CNBC. That got a nice little lift, right? The stock was trading right around like 55 when the CEO came on and, gave the stock a nice move up, about three or so dollars into that. But again, you could see, even though the stock was up 9% today, right? You look at this and, the moves in these names are just ginormous, right? So you say, wow, the stock really didn't move that much from yesterday. Yes, it did. It moved. It was up 9%. So again, you kind of have to zoom out to realize, like, the magnitude of some of these moves that are taking place. Some other names, right, in this group, like look at the movement of Western Alliance. Right. This also finished up 14%, but you could see from the open, The stock was up around 37 bucks. It closed at 29. So again, these names are making ginormous moves. If you don't want the risk of these things, or that, these things are getting halted left and right. One of the things that I always try to give some traders some ideas, but hey, it's like, just trade the ETF. The ETF's not going to get halted like that, right? And it's still, so people are like, oh, I don't want to trade the ETF. It's not volatile enough. It is volatile, and you can make money with the options too, if you so choose to, but you don't have to worry about the name getting halted because of who knows what, right? So in any event, I'll move on. That was my second theme of the day. I talked about the VIX. Like, I wasn't happy where the VIX closed yesterday, right? I said yesterday that I wanted to see it close around 24, 25. Well, today we got that, right? I talked about it, how the last couple of days were kind of like toppy looking candles, right? So look at where we closed. So, I mean, that's a pretty decent move, down 10% today, right? In the VIX, 10.5. Right. One other thing that I saw selling off too is crude. Right. Crude has now broken this range. It's funny. I tweeted this chart out. I immediately saw other traders tweet this out like 10, 15 minutes later. And it's okay. You could copy me. That's no problem. I don't have a problem with it. And I do think more people are paying attention to the range break there in crude, but that does kind of get you out of this move, right? Now it's still, I think it's kind of right below this area, but you could see that there's this overhead 200-day moving average, right? And crude has, even before it broke this range, been going back and forth. There hasn't been any upside momentum to it at all. So that might be good for inflation. Speaking of which, I just wanted to touch upon too, I've been doing this in just about every one of these videos recently because there is this big move. So what is being implied at this point? Forget about all the predictions, right? Everybody likes to predict. I don't know why people are so focused on what Goldman says or what Barclays says about what they think is going to happen. Just look at Fed Fund futures, right? So they're implying 19 basis points. So yes, it looks like we might get a rate hike of 25 basis points, but that could change. Every day this is changing quite a bit, right? The other thing to note too is once we get through July, the market is now implying rate cuts, right? Again, they're not huge. None of this stuff is huge in magnitude, right? But it is a decent trail off, right, from where we were. And if you want to look at this too, because July was the peak, this is the one that I keep showing, right? You could see how this has been, moved down, right, decently. All right, so again, that's just what that's future rate hikes, or at this point, cuts. All right, next, again, I'm trying to talk quickly and get through a lot of different points here. So I feel like I've missed talking about this one. I know I talked about it in the trading room, but this is the other thing that kind of makes things so complicated right now, right? If you look at the sectors, right, semis did well today, right? But remember, like going into going back about a week, right? What was really strong was the industrials, right? I've talked a lot about this group, right? I call this the nuts and bolts ETF. Look at what happened to this thing. Was making new highs at a high of 51.80, and completely fell apart from 51 to 47. This is another exercise in taking profits, right? This is not a market to be like, letting your winners run right now, because these types of things could happen, especially while the Fed is still tightening or has very high interest rates for the short term rate right now. So, will this area become a leader again? I don't know. And one of the things too, which kind of, here's the PAVE ETF too, which is global industrials, right? Here's what the XLI looks like. So this group now looks like a mess. So will this come back? I don't know. It needs more time. So it's interesting just to see that this group was showing so much, strength, not only looking at the ETF, but under the hood, there was a lot of names every day that were basically breaking out, right? So we're not seeing that anymore. So what's going to be the next area that kind of steps to the plate? The one that I'm watching as well has been the semiconductors. They've been acting pretty decently, right? They also had a lot of good earnings reactions. So that may be the case, but I just kind of go back to, I think that this market, so many areas have gotten hit, right? It's going to take some time before this market heals a little bit, both in the technicals and the confidence, right? People have to be confident to invest in a bank, right? Or to put banks are operating somewhat on confidence, right? You have to feel confident in the bank's business to put your money with them. And I'm not talking about investing stock. I'm talking about, putting your deposit money with the bank. So that's very much a confidence game. So is the stock market, right? It is very much a confidence game. If people are not confident in this market, right, they're not going to put money to work. So that's what kind of takes time to kind of work its way through. So some of the things that I've been talked about, like the VIX going down, like those are good things, but really people have to get more comfortable. And I could say myself, I'm not as comfortable as I was. I was thinking back a week ago that basically we weren't going to see any more than 25 basis point hikes, right? When Powell switched and said, like, hey, we might see faster interest rate hikes, and the Fed fund futures jumped from 25 to implying 25 to 50 basis points, right? That also like changed my view about, hey, that's probably not going to be good for the market, right? And it wasn't last week. So let's let things kind of settle down a little bit. And in the meantime, I'm trying to basically add a little bit of risk into some things that, look like they might be buying opportunities. We talked about this name, for example. This is one of those industrials / like construction companies. This is Terex that was on a really nice run. Now, I know exactly where I'll get out of this thing if it doesn't work, right at the 50-day moving average and the bottom of value. So I felt like trying this one today, put on a position. Maybe it kind of backs and fills, probably will take some time, but we are seeing some other names recover a little bit quicker. ELF is one of those names, right? Came down and tested the bottom of value and now back above the moving averages. I mentioned the semis, right? So they've been moving faster, right? Look at AMD, just yesterday touched the bottom of value, now all the way back above value. Had a really nice day. Unfortunately, I had this trade on yesterday. I kind of decided, towards the end of the day, because I didn't like how the market looked, to take the trade off. Unfortunately, those things are going to happen because you have to be comfortable and you have to be confident with this market. And I'm not there overall, feeling like really, really confident. I did put on a trade and I kept it on today in Teradyne. I like this move into the value area. Again, I know where to take it off, right around 103 if it breaks back below here. But I figure give this thing a try. I'm looking basically to for this thing to get up to 106.80. And then we'll see what it does if it gets up to there, right? TMDX was a name that I talked about yesterday, how I put on a small position. Yes, I took my target, took a target right around that bottom of value, right? And if it kind of comes back a little bit to the top of value, I'll put that target back. But this was a nice gain today, up to 77 at one point today, right? We'll see where it goes from there. NVIDIA had a big day today. Again, this was a really, like, if this gave a nice trade setup, right? It went all the way through the value area, right? So that's what's called the 80% rule, from one area of the value area to the other, right? Stopped right at the top of value. Also stopped at this VPOC up here, and we'll see. That's overhead resistance. We'll see if it can get through some of that, right? So that's another name to watch. ALGM, I think, had their investor day today, right? I would watch this 45.26 level for tomorrow, right? It has had at this point some consolidation, met up with the 20-day moving average. So that's another name to watch. LSCC is another name too, has been very strong, was up 5% today. Nice bounce off of that bottom of value. And got a couple other names written down here. I think I covered most of them. Did I cover the last? Yeah. So, I mean, we'll see. I think like confidence just doesn't come right back into this market. It takes some time. People have to feel more confident, I think, about what the banks are doing. They were too shaky today. So we'll see how things go tomorrow. We got the PPI report tomorrow, quadruple witching on Friday. But I think, being nimble in this market also really, really helps. And, of course, being a risk manager first above everything else. All right, guys, have a great night. See you tomorrow.